The week ahead. Let me start with the nuance today. One of the things that we talk about in our educational courses is what can happen late in the day relative to shorter term day time frame traders. And this can be very misleading for more serious traders. An awful lot of the day time frame traders are required to go home flat by their clearing member, either because they don't have the experience, or in most cases, they don't have the capital to carry a trade home overnight. Now, what happens with these day time frame traders? They get greedy and they stay till the very last minute in the market. Then they are forced to liquidate. When that liquidation takes place, they're all liquidating at the same time and there's no one to buy it. So if you're looking at today's profile, you see the red line. That was the late liquidation by the day time frame traders that can't go home long. Underneath that was more solid buying by either, longer term traders or institutional buying. And that took the market back up past the earlier high. What you're seeing there is one of the trickiest situations for traders. It is very misleading. They think there's real selling going on, and there wasn't. All there was forced liquidation from the day time frame traders. You have to understand, when you see the market very slow like it was today, you have to understand that more than likely that is the result of an awful lot of very short-term laggard traders overstaying their welcome. All right, with that nuance out of the way, let's take a look at the long-term monthly bar. The monthly bar shows that the rally continues to one time frame higher on the monthly basis. Let's take a look at the weekly bar. The weekly bar also shows that the trend remains up, but you'll notice that we've got a 6-week balance up there. Balanced trading guidelines are applicable to monthly, weekly, or daily bar charts. So with the 6-week balance, when we come into next week, what we're looking at, see, does the market remain within that balance? Does it break to the upside? Or does it look above and fail? If it looks above and fail, then it targets the lower end of the 6-week balance. But that is your key. That 6-week balance is your key reference to begin the coming week. Now let's finally take a look at the daily bar. Once again, we see that almost exacting trend line low on the daily bar. That is usually an indication that we are looking at very late term, short-term buyers. That is a dangerous situation. As you'll see, that's happened before. You get that, then you get a liquidation break, then the market turns up again. But it's that liquidation break that can do you in, and you have to be very careful. As you see, coming into the current multi-day balance, we had that sharp liquidation break that took out the 4-week lows we had. Once that was cleared up, in other words, those 4-week lows, those weak lows, those were caused by weaker hands, shorter term buyers. Once that was cleaned up, the market was then ready or able to go higher. Now, once again, we have an indication of the same kind of laggard, weak buyers. The short-term trend is up, but keep in mind, keep an eye on that trend line. That is your support. But as we enter next week, the long-term trend remains up. When you look at the weekly bar, we have a 6-week balance. When you look at the daily bar, we have a trend to the upside, but you want to use that trend line as support. Have a great week.